Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news of deja vu, markets are turning their attention to debt risk again. But first, new American single-family home sales tumbled in January from a 10-month high as sales in the west of the country fell sharply. And following yesterday's softish existing home sales, some analysts think the whole sector may be on a softish footing. Adding to the sentiment, there's been a similar tumble in confidence in the vast American services sector. A survey out overnight showed a big drop in the rate of expansion to a 28-month low. Equity and bond markets are unsettled by the data. Wall Street is down about 1%, bond yields have fallen sharply, and CDS spreads have risen. Asian credit risk is also in the spotlight today. Standard & Poor's is saying that companies in the region are on the hook to repay almost $1 trillion of debt over the next 4 years, with more than half of that priced in US dollars. The greenback strength and the slowing economic global growth will make it tougher and more expensive for these borrowers to roll over US dollar debt as it comes due. And China's shadow banking sector is morphing to avoid tighter regulation. Brokers and funds are taking on the role previously played by more heavily regulated trusts in their expanding informal financing sector. Banks are also increasingly turning to so-called directional asset management plans issued by brokerages and the subsidiaries of mutual fund providers to channel lending. The amount of money placed in such products jumped 70% last year to $2.9 trillion, outpacing the 17% growth for trust assets. The level of world debt is at record highs, propelled primarily by this Chinese debt growth. But there are other pockets of explosions as well. Since the GFC, $60 trillion has been added to the world's debt load, and that is now approaching $200 trillion. That is more than 2.5 times the world GDP. And overnight, Brazil's sovereign credit rating was cut to junk by Moody's, the last of the major rating companies to strip the country of its investment grade. And South Africa's finance minister has said his country's economy is in a crisis. In New York, the benchmark US Treasury 10-year yield is sharply lower today by 14 basis points to 1.66%. Yesterday, local swap rates fell by 4 basis points across the curve, and they are almost certainly going to fall further today. In fact, the last time our 2-year swap rate was this low was in May 2012. It is now possible that that record low will be challenged in the next few days. The oil price is unchanged from this time yesterday, although in the meantime it has risen and then fallen back. It is now at $32 a barrel in the US, while Brent is just a little higher at $34 a barrel. The gold price is $16 an ounce higher today at $1,241 an ounce. New Zealand dollar still range trading, however. It is now at 66.3 US cents, 92.4 Aussie cents, and at 60.2 Euro cents. The TWI will start today at 71. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.